Good morning, Facebook and YouTube community. My name is Jennifer Noreen, and I am a owner of an agency called Beyond Brand Collective. And I have the privilege of having these two individuals, Bryan Lichau and Marie, as my marketing clients. I've worked with them for a number of years, both of them. And I love the areas of expertise they both have, and these areas of expertise interplay very nicely. So today we are talking about a 1031 exchange transaction, which is really at the core a part of the real estate industry, but there's a lot of involvement with a CPA business advisor like Bryan. So we're going to talk about why that is. But so Marie is a real estate advisor. She has a history in real estate transactions. She has experience as a property owner, investor, property manager, many different levels and areas of real estate. And Bryan actually came up and out of an individual and corporate tax background, and he's recently opening a arm or the largest part of his business is business advisory services now. And Bryan can explain more about that. But the reason that Bryan is here today is because many of his clients have obviously invested in properties, and he finds himself giving advice in the area of tax when they do invest in real estate. And so 1031 is kind of a complex, very rapidly happening type transaction. But it's also a large opportunity, as I understand. And so that's why we're taking time today to talk with Bryan and Marie. 1031, well, 1033 now. 1031 on Halloween 1031. So good morning, everyone. So let's just start this out here. Marie, what is a 1031 exchange transaction? And the rules of the game today are that you're telling the audience as if they are not a realtor, and they're certainly not a tax expert. So I really encourage you guys to keep your terminology simple. And if you don't, I'm going to wag a flag and I'm going to say, wait a minute, go back, explain that again. So what is a 1031 exchange transaction in everyday language?
Well, a 1031 exchange transaction is not a tax eliminator. It defers the tax. So that means that the tax is still going to be valid, but it's going to move forward to the next property that you attain. So in 1031 exchange, and Bryan can speak to depreciation. When a property has fully depreciated and you want to move forward to a bigger property, a 1031 exchange is definitely a way to defer the taxes and move into a larger property that produces more cash flow and gives you a bigger cash flow stream. And it's very particular on how the IRS defines a 1031 exchange. And one of the very first things is to have a facilitator to actually facilitate that transaction. Otherwise, it's not a 1031 exchange.
So is this something that experienced real estate investors participate in, or is this something available to all, or who is typically in this?
It's available to everyone, and it's on the business level. So if you have like rentals and things like that, it is a business transaction from, like, if you have a rental. And the reason why I know about this is because one of my hats under the umbrella of real estate is property management and rentals. And then those rentals can move up to a bigger property. It doesn't have to be a residential. It could be a commercial. It could be, a shopping center. And that's kind of part of the definition of like for like, being business to business.
So taxes are taxes, whether you're a real estate investor for the first time or you're a homeowner that wants to diversify. So it defers taxes. So Bryan, can you talk about that part of this, and how does it defer taxes, and what are the practical steps to take advantage of that?
Yeah, certainly. And one thing that Marie touched on was the investment portion of it. And you just mentioned homeowners. And so really you want to be careful not to, because you can't use an exchange for a personal residence. So so it's got to be an investment property. And then so what happens is, let's say I buy an investment property for $200,000, rent it for a few years, and then all of a sudden now it's worth $400,000 in a good market. And so what happens? So you've got that $200,000 gain built in there if you sell it, but with a 1031 exchange, what can happen is as long as you meet the criteria, and we'll talk about that in a few minutes here, but if you meet the criteria for a 1031 exchange, then it will defer that gain, that $200,000 capital gain on that property until you sell that next property that you're exchanging into. So, I mean, there's lots of little things, but for a simple explanation, that's essentially what happens there. So there's lots of things to think about. So
is it correct to say available only to licensed real estate investors?
Not necessarily. I mean, I've got a lot of individual clients that have investment properties, or maybe even one or two rentals, and they've utilized a 1031 exchange to put off those taxes. So yeah, and Marie said it as well. You're not eliminating tax; you're just pushing it out a little bit.
Yeah, so it's a deferral. It's a deferral.
Exactly.
Okay. And allows you to get a bigger property without tax ramifications, which I think Marie kind of already touched on.
Yeah.
So, tell us about the criteria, Bryan, because you piqued my interest. So, what is the criteria?
I mean, there's timing purposes. So really, you have to. I mean, and the biggest recommendation I can make, and I'm sure Marie does as well, is you mentioned an intermediary or a facilitator for the exchange, and it's important to make sure that you're getting someone engaged early to be able to ensure that all of those requirements are met, because they know a heck of a lot more than anybody else really on the exchange matters. So,
that is
but the first. Yeah. Oh, absolutely. I know. That's the first thing I recommend when someone talks to me about it.
So who is the intermediary? Is that an attorney or a tax person, or who is that?
It's kind of a specialist, Marie. I think you probably have some contacts there, I'm sure, with with that. So, but yeah, 45 days is the first one. So you have to identify. So once you have a property sold, so if you sell that investment property that you've got 45 days to identify the next property. And if you don't specifically identify it, then it wouldn't qualify for the exchange.
Oh, okay. Got you.
So that's the first one. So Marie, you want to take the next one? The 180. Do you want to take that one, or you want me to go for it?
Oh, I see. Yeah.
It's up to you. Yeah.
Well, as Bryan mentioned, the whole transaction has to close within 180 days. And at some point in that timeline, you do need to identify. If you haven't identified that first property within 45 days, then you ask the facilitator to identify 3 more properties. And those are the only properties that, once you have identified them, those are the only properties that you can include in the exchange. So it's very tight timelines, but it's doable. I mean, I've closed one just last year. It was one of my clients that had a couple of rentals that they use the funds. And by the way, all the funds that come out of that sale have to be applied to in the next transaction. You can't take anything out. It would be called boot. And that's something that you cannot do. But this particular client wanted to 1031 exchange into another property. It's kind of unusual. He wanted to exchange into a bigger property, still rent it out, and then eventually after 2 or 3 years, he was going to use it as a retirement home. So he still kept it within the rental arena, took his rentals, moved it into a rental, and then he's going to move into it as a retirement home.
Interesting. Okay. Yeah. And that's allowed.
Oh, yeah. As long as it's like for like and business to business. Yeah.
Okay. And is that why it's called an exchange? Because it's really not a transaction where there's profit and benefit. It's just exchanging one investment for another. Is that
exactly
correct?
You got it.
Okay, got it. So what about the LLC or not an LLC part of this? So what does that have to do with exchange?
That's coming to the fore because some people want to purchase a property as an LLC, but lenders don't like to lend to LLCs. So it makes the transaction difficult But I mean, it is doable, but that was where an accountant or actually the facilitator or the attorney has to come in to make sure that that goes smoothly. But in general, they like to lend to an individual, not an LLC.
Oh, okay. That's insightful. So that's the case, Bryan.
So from a tax standpoint, it really doesn't. I mean, at the end of the day, the individual's on the hook for the taxes, not the LLC. I think the only time where it might make sense to go to the LLC is if you have multiple owners potentially. I mean, at that point, it's almost, you need to have that structure. So, but like Marie said, it's not impossible. It just kind of adds another layer of difficulty from my understanding. I mean, from a liability standpoint, I worked with people who like to have that extra layer of liability protection with that LLC. So I'm not an attorney, but it really it comes down to personal preference and the risk and what's the word I'm looking for? Just the risk avert, or yeah, you know what I mean. So
Okay.
It's fun.
So we wanted to touch again on the fact that it's a time sensitive transaction, and I have you have to have a facilitator, which you've touched on. Transaction must close within 180 days, and first of all, you identify your properties within 45, and then it has to close within 180. So I'm going to put that in our banner so people have that on the video. So identify within 45 days. Is it proper to say the replacement property?
Perfect.
The new property?
Yeah.
Perfect.
Or replacement property. Okay. Okay. And then transaction must close.
And I think it's been trickier with a hot market like it was last year. And you probably know a lot more about this than I do, but it was a lot trickier to perform an exchange because you don't know what the competitive nature of the market. Okay, I can only identify 3 properties.
Mm-hmm.
How do I know I'm going to get either of those 3 before you close it? So it was kind of more challenging.
Properties were closing, and those properties weren't available anymore. So you had to, it was very touchy because you would identify, and then we didn't know if that property was going to be there when it was time for us to close. So it's quite tricky. Yeah.
So is this something that, excuse me, most real estate investors are aware of, or is this something that you both find yourself educating people about?
I found that the clients or investors that I worked with, they needed education. They needed to talk to the facilitator, and they had misinformation, like they could just go buy the property and then call the facilitator later. I would say, no, you got to talk to this facilitator first, or it's not going to work. So I think there could be used a lot more education out there so that they could use this tool to affect more cash flow for themselves.
Yeah.
Okay, so you're kind of providing the refining of the process, it sounds like.
Yeah, I agree too. And one of the questions I get is one of the confusion points, I should say, is the type of property. So as Marie said earlier, it's got to be a like kind, so like for like. So you can't go trade or exchange a residential rental for investment in a business, let's just say. So it's even though they're still they're both investments, it's got to be the property itself has to be a like kind, is what they say. So it's got to be a residential rental for a residential rental. Now with the structure and rental properties, it can be a little gray, but I know the IRS is trying to tighten up a lot of those regulations there. So even going from residential to commercial is a question mark. So it just depends on the situation. Yeah.
And I think too, more recent laws have kind of included more into that definition, like for like. So, but I think the key element is that they are business properties. It cannot be residential. You couldn't go take, a house that you own to live in to buy another house immediately to live in.
Exactly. Yeah. Primary residence or even secondary residence. So if it's just the house that you're not renting, it still would qualify as a residence. So yeah,
Okay.
absolutely.
Okay. So if I am a property owner and I'm thinking about doing one of these and I'm forming this team of people I need involved, what's my first step? Is it the realtor or is it the facilitator? Is it the business advisor?
I
Good
think,
question. Yeah, go ahead, Marie.
well, well, of
Me.
course, the realtor. I think the realtor and the client are going to seek out a facilitator. You know, they're kind of like even there, so that we can all be on the. I mean, when I did a couple of, or 3 or 4 of them. I was always on the phone with the facilitator to say, okay, we're going to do this. What are the numbers look like that on this? Is this going to, with the net proceeds, is this going to work out, as far as what's going to go into the property and so forth and so on. So I was always in communication with the facilitator to make sure that deal closed.
Okay, so I have a question. So how does everybody get paid, so to speak? So I understand these are exchanges and not a profit where an owner can walk away with, $100,000 to put in their bank. So that's not the case.
No.
So does a realtor still make a percentage of the transaction like they always would? That's my one question. And then is this facilitator or intermediary, is that a paid professional?
Yes.
So does the realtor commission situation the same as any other real estate commission? Okay.
Yeah, and then the facilitator has a fee to facilitate the transaction, and they're paid as well. And then the client or the buyer gets a bigger property. So
yeah, that's the win. And so obviously, Marie, you could not be the intermediary, right? Of course not. Can't be both. And so, Bryan, as a business advisor with tax expertise, could you be an intermediary, or does it have to be a legal person? Or
No, I think it's really just someone who has the expertise. They know it inside and out. They have those qualifications. They do it all the time, and essentially they're holding everything in escrow.
Right.
So there's really got to be that level of professional that has that experience and has that capability to initiate escrow and everything like that too. So it's really it's a very specialized area to work in. So that's I mean, and to me it comes down to really having a plan at the beginning. It's and working with someone like Marie and knowing someone who knows the market.
You hit the nail on the head, Bryan. I'm sorry.
You're good. No, you're all right. It's really, and Jennifer, I say this all the time. I get tired of hearing it, but that old ounce of prevention is worth a pound of cure, right? And if you're doing the planning up front, and you know what you want to do, and you know what you have to do to get there, then that planning piece of it is going to be so important. And so that's why working with an advisor like Marie to make that plan and then get the rest of the pieces in place is going to be the best route. So
to make it.
Yeah. So Marie, when you choose professionals to participate in a 1031, like a lender, inspector, does it affect any of the other decisions relative to the transaction, or not really? Is it just mostly adding the intermediary?
Well, yeah, I do kind of recommend, if my client needs a recommendation for lenders, I will send him several lenders that he can interview to see if it'll work with what he's trying to do. And also the facilitator, attorney, CPA, somebody like Bryan, so that, all of these pieces will, believe it or not, they all have to work together. I mean, it's so intricate to where, they all have to work together for it to close at the end. That's the end goal.
Yeah, and it's not a lot of time, really, if you think about the time it takes to identify a property.
No, it's not. It's very quick.
Yeah.
All of it. Yeah. And it sounds like a job for a strong project manager. I mean, I'm sure an intermediary is the expertise, but it's also someone that is aware of here's the steps and when they need to happen or it's not going to happen kind of thing.
Right.
So, yeah. And it would be difficult for either of you to do that, to be that role completely. Although, Marie, I'm sure you find yourself trying, but it doesn't work.
No, it's actually part of the law. It's part of the law that the IRS has put forward is that if you don't have a facilitator initially, it's not considered a 1031 exchange in their eyes. So,
Oh, wow. Okay. So you're legally required to report a name
a
of
facilitator.
who you're using. Okay. Yeah. And again, the benefit is the upgrade of the investment, right, for property owners. And so Marie would be the one to contact initially. It sounds like she's the master of the plan and the process, and then she can help you involve people like Bryan and other players that need to be a part of this. So very good. Was there anything else before we wrap up that either of you would like to add that we haven't touched on strong enough? Or so I'll have to strike. I'll strike from the video homeowner because I understand that is incorrect. It's not just homeowner.
Oh no, that's okay. That's a great
Well,
way
it's
to
rental
distinguish
property
between.
owner, right?
Exactly.
Or commercial property owner, correct?
Correct. Yeah, investment property. Exactly. So really, what I would say is there are so many details. I mean, we honestly just scratched the surface with a lot of the requirements, and so
wow,
I mean,
okay.
I think that's another important reason to really get involved with professionals early on, and it can down the road. I mean, it's definitely going to save a lot in tax. I mean, the less you pay now and the more money you have in your hands that you don't pay in tax. I mean, you could do something more with that money and make money off of it. But you'll still have to pay tax eventually. But I think just having that availability of those funds is very valuable. So.
Yeah. So I have one final question. So, like Marie, you talked about your sample client of having the plan long term of using it as a residential property. So is there any difference in process when that is the long-term plan or no?
No,
1031 is
in between. Just remember, in between that, it did become a business property. It was a rental. We can make that clear. It was a rental before he was going to move in.
Okay, got it. Wow. Okay. Well, very good. Thanks, both of you. Marie Pettie, she actually functions as a property manager, safe harbor property manager, but mostly as a real estate advisor. She's a real estate expert. And Bryan Lichau owns Osprey Advisory Services and also has a history as a CPA and very much a tax individual and corporate tax expert. Although he spends most of his time now as a business advisor in the area of growth for businesses of varying sizes. So it's great to speak with both of you. OspreyCPA.com is where you can find Bryan, and Safe Harbor Rents is where you can find Marie. Why don't each of you give a phone number that people could use to reach out to either one of you? That would be good to have on the video.
Awesome. I'm Marie Pettie, Safe Harbor Property Management, and my cell number is 253-820-6298.
Okay, and Bryan?
Yeah, I'm Bryan Lichau, CPA with Osprey Accounting Services, Osprey Advisory, and our office number is 253-838-6708.
You may not get either one of them on the phone immediately, but definitely eventually we'll be in touch with one of them or one of their wonderful staff. So thanks again, you guys, and we'll do this again. Take care.
Thank you,
so much.
Jennifer. Bye-bye.
Bye, everybody.